Good day traders, it's Forex Evangelist here again, and welcome to today's video. You can see the title of this video from the thumbnail, the reasons why so many breakout fails. So I'm talking to retail traders. So in this video you are going to be understanding the reasons why most of the breakouts you have been trading has been failing. Okay, it's simply the way you see structures, that simply because of the way you see structures and interpret structures. That is the reason why your breakout has been failing. Now, one of the reasons why traders fail or why breakouts fail is because traders don't understand. Traders don't understand impulse and correction. And I've talked about this in my previous video. Because traders don't understand impulse and corrections, they find it difficult to even understand breakouts. Now, a lot of traders, when they see moves like this, they enter after the break of this high, they enter again after a break of this high. But entering at this point simply means it's too late to enter. You are entering too late. And maybe when you go on Google and watch some videos, this is exactly what you have been told. But that is not correct, because you are being the liquidity, for market makers. They are engineering these moves to trap other uninformed traders, technically on the chart. Now, but understanding how waves moves is very important. Now, in our previous video, I'm going to be dropping the link. You can click on it, to watch the video on impulse and correction. If you remember, we said that impulse, and I'm repeating it now again, is a fast and sharp move of the market, that it's one wave. It can be 3 waves. I'm talking of impulse, and it can be what? 5 waves. That is one for impulse, right? And now, for correction, we said it's minimum 3 wave structures. Meaning, if you have an impulse like this, a 1 wave, for example, correction is minimum 3 wave structure. It can be 5 wave structure. Now, some people may begin to ask, how does it, give us the clue about what? Liquidity. Now, one thing you must understand is, using the concept of wave analysis, which I always, share with traders out there, is that it helps you identify waves and structures correctly. Now, I'm just going to be giving you, the foundation of wave analysis, which says for every up move, there is going to be another up move. And for every down move, there's going to be another down move. Anything happening in between is called correction. Okay? This is how price moves. Now remember, we said impulse can be 1 wave, it can be 3 waves, it can be 5 waves. But correction is minimum 3 waves, meaning it can be 5 waves. That is for correction. So when you have impulse here, you expect to see a 3-wave structure before another push up. Now, because you don't know how to read impulse and correction, which after annotating on the whiteboard, I'm going to also, be taking you to the charts and showing you real-time examples. And probably, maybe when you look at it, we are going to be using pound dollar as a case study. And probably when you look at it, you will begin to see some of the mistakes you have been making. All right, you could even see maybe the loss you took a few weeks ago. Okay, now, so using this scenario, what a lot of retail traders do when it comes to breakout trading is this. When they see an impulse, all right, now, and they see a correction, okay, now, maybe this correction here came in a form of 3-wave structure, like the first. Now, let me annotate well. Now, what some traders do is that if they see an impulse, for example, and there's an impulse like there's a structure like this. Now, before the thing even happens, most of them are entering sales. Immediately price breaks this low. But immediately they enter, price doesn't just push down. It moves a bit, gives them a correction. And what again happens? Price will again break, probably this high again. They will say, oh, seems price is pushing to the upside. Price will again return down, break this low again. They will say, oh, it seems price now want to push to the downside. They will enter the sell, put their stop loss probably above this high, price will return back up again. That is the reason why I gave you, the basics of wave analysis, that for every up move, there must be what? Another up move. Anything happening in between these two up move is correction, and that correction is minimum 3-wave structure. So also to the opposite, that means to the downside, if you have a move to the downside, for every move down, there has to be what? Another move down. Anything happening in between is correction, and that correction is minimum 3-wave structure. So you can see that when these traders mark this high, they want to enter the breakout. You can see it takes them out and price pushes to the downside. So because many traders don't understand, these things, that is the reason why they are always being stopped out in the markets, because they don't understand how to read waves and structures. Because how is the Forex chart made up of? It's made up of candles, and these candlesticks create waves. These waves create structures, and these structures create trend. So because they don't understand, even the tiny part, that's where the problem begins. Okay, they don't understand the foundation, the basics. So they see impulse and corrections the wrong way. Because that's why I made that video. Like I said, I'm going to be leaving the link to that video, so you go and watch what impulse and correction really is. Because what they see is as maybe uptrend is price creating highs and lows like this, but that's not exactly how it happens. So that is the trap being engineered by banks and institutions. Now, technically on the chart, if we give an example to the downside again, now let's take it again. If price pushes down like this, now maybe price will give you something like this, now up. Now when price comes and take away this high, some traders will say, oh, there has been a daily breakout. They want to enter maybe during London session or New York. Price pushes down, because they don't know that this is actually an impulse, but that just came a 3-wave structure that is part of what the tiny correction, which is the correction here. Impulse, correction, impulse, which is the correction. Then for this downside, we'll get this downside. So you have to understand that when you use the theory of wave analysis, like I said, this is what we mean here. If we have this impulse here and price gives us this move, a lot of traders call this correction. But this is not correction. This is part of the correction, because this is just impulse. Just an impulse to the upside and an impulse to the downside. Now what happens then? You want to see a slow move, maybe a messy move. Sometimes it may not be a messy move. It may be a clear 3-wave structure between. So if you see sharp up again, you want to see something that takes time and then up. What that simply means is that for this up move here, we have gotten this up move. And what next do you expect? For this down move here, we have gotten this down move. We will get a down move. That is how price moves. So we are not expecting that once price takes away this high, it begins to push up. No, breakout trade, no. Okay, and after that, this structure is now completed, because correction is minimum 3 waves, 1, 2, 3, on a bigger degree. The trade here is a smaller degree, because this is correction inside correction, which I'm also going to show you on the chart. So here we got impulse, correction, impulse. That is for down, we got this down. And now the corrective structure is completed. Now under this low here is now when you begin to look for your setups. You look out for your levels to now go for a potential buy for this buy here. That's how price reacts. That is how price moves. So with this, you can be able to avoid these false breakouts. Okay, so meaning that that already pricing away this low is getting ready to pump up, not actually totally reversing to the downside. And this is the mistake a lot of traders make. This is the mistake they make. They think price is going to continue pushing to the downside. Price will just reverse, because for this up move, we need this up. For this down, that's why we have gotten this down. This is a correction between this down and this down. And this 3-wave structure is a correction between this up and this up. That's how price moves basically. So let's go on to the chart and see some examples using GBP USD. Okay, so on the chart here, you will see this is a pair of GBP USD. So let's focus around this area. From here, let's just focus from this point, from this top here to this downside, from here to here, and let's see what happened and how traders could have been trapped in these markets. Now here you could see price gave us an impulse. This is definitely an impulse. Here we got a correction. You can see impulse You can see the three-wave structure. Now for this up, we got this up, but this up came in the form of a three-wave structure. Let me clean, the drawing and expand the chart a bit. Now you can see, sorry guys, now you can see that impulse. You can see for this downside, we got this down. Now a lot of traders will begin to look for sales. Immediately price took away this low, and when they entered the market, price will push down a bit and will reverse and probably reach their stop loss either above this high or around above this high, and price took out all those stop losses, because that is where they think maybe they are protected. But at this point, the most protected area is around this level, because this is the first impulse. Everything happening here is just correction, but because they don't understand waves and structures correctly, this is the reason why they will always get trapped in their breakout trading. Okay, so you can see here as well, we got this up. Some people will see this pullback and immediately price took away this high. After this green candle, they may begin to buy, but after buying, what happened? Price just pushed to the downside. So a lot of traders don't understand this. They say, okay, price created the low, price broke this high, do we want to enter? No, this is here simply, if they understand it, impulse, a three-wave structure, correction, and then for this up, we got this up. But because they don't understand what is actually happening here, they are always going to get trapped. So immediately price broke this high, they may think, okay, maybe if they get their conversion, they are buying, or broke this low, if they are getting their confirmation, they are selling. But what happened? Markets reversed immediately because they don't understand how structures move. So understanding of impulse and correction and how waves move is very important for you to understand that, okay, we are probably having a false breakout, that market is not actually going to move to this direction. Here again, some of them may see this on the 1 hour time frame because they are not actually understanding and following the trend. They may see something of this nature, and say, okay, price giving impulse here, correction, at the breakout here, we are going to enter a buy. And what happened? Price reversed. You can see, because many of them are not understanding this. Now, markets begin to react, and I say, okay, if price takes away this low, we want to sell, and takes away this low, we want to sell. Price takes away all those lows and begin to reverse again, because they are not understanding impulse and correction and the way price moves in waves. Okay, and the way price moves in waves. Now, look at it, because here, simply, price just gave us an impulse, a correction, an impulse, a correction, and an impulse. A 5-wave structure. After that, market has no other reason but to reverse because the entire structure is completed. So this is how you can actually do that. It's not very difficult to do. It's just for you to use this video, go to the chart, practice on the chart. You're always going to be seeing the examples, okay? And don't forget to always overlay whatever you learned with fundamentals. And we also teach and discuss fundamental analysis for free in this channel. If you're actually following this channel, you are going to be learning a whole lot about trading for free. Okay, that is just it, guys. I believe this video is helpful. Don't forget to like, share, subscribe to this channel, click the bell icon if you haven't, and see you in my next video. Bye for now.